It struck me that we've gotten some inquiries about disability insurance. Norm, welcome. How are you this afternoon?
Thanks, Howard. I'm really good, man. I'm doing fantastic. I cannot complain whatsoever.
Well, listen, to get started, do you want to kind of give people an overview of how disability works and how waiting periods work and how different people qualify in different areas and what they can do and what they can't do? I know that's pretty open-ended, but why don't we just start at the very beginning? And how does disability work, and how does it benefit an individual to have it, and how does it leave somebody unprotected if they don't? So I'll kind of let you rip on that, and we'll go from there.
Okay, great. Well, first of all, thanks again, Howard, and thanks everybody for being here today for this informational session. I'm here to answer questions and open up the can of worms, so to speak, and just shed some light, industry-wide into what this insurance can do for you as an employer or the employee. And really where it begins is we found that, with the advent of the ACA, is really kind of where it propelled voluntary benefits and disability being one of them into the spotlight, right? So with the advent of the ACA, it really kind of helped voluntary benefits grow by leaps and bounds. And I don't know if anybody realized this, but we're right in the middle of a global pandemic. And so that's really taken it to a whole new level. People are much more concerned about how to protect themselves, how to not only fill in the gaps, but really how to pay for everyday expenses. Because what we found is whether they're unemployed or they were let go or furloughed, a lot of times these policies came in handy for them to be able to pay their bills, keep food on the table, the light bills on, pay the car note, in some instances even pay their mortgage. Most disability insurance, you may already be aware, normally pays up to about 60% of your income, right? So whichever carrier you choose to partner with, that's typical across the board. So really what it's designed for is exactly what Howard said, is to insure your paycheck. We've got insurance for our pets, we've got insurance for our automobile, for our home, for our health. But really this is something that's considered, for lack of a better term, paycheck insurance, right? Because it really covers your income up to 60% of it. Everybody knows, everybody's seen the commercials, from one of our competitors in this space who has a cute little animal that does their talking for them. And really they've done a great job of informing the public, on what exactly that is. If something were to happen to you on the job or off the job, you had an accident for whatever reason, and you weren't able to work and to pay your bills, that's exactly what these policies are designed for. So it's a great low-cost way for employers to either offer these benefits to their employees to take advantage of them on a voluntary basis, number one, or number two, what a lot of employers are starting to look at is, because they're so low cost, anywhere, depending on which carrier you go with, anywhere between $4 to $11 per week, and the level of coverage, obviously, that's really a low-cost way to help protect their employees. So a lot of employers are taking a look at that option as well, because it makes a much more attractive benefits package in the long run, right? So it gives high-quality employees, potential high-quality employees, a reason to choose you as an employer over somebody else, because you're offering more robust benefits offering. So it's always nice to be able to include that if you can, because statistics tell us that whether it's on the job or off the job, these people have a need for it. And 86% of the policyholders that we've polled tell us they'd like to be able to at least have the option. So that's a real broad stroke or general overview of how the disability, quote unquote, operates. So I'll go ahead and pause at this time to take any questions if there are any. It's really not that difficult of a situation to wrap your brain around, but if you have any questions, I'm more than happy to help you do that. So I'll just go ahead and open up the floor, Howard, to any questions.
Norm, you want to explain the difference between short-term disability and long-term disability?
Yeah, sure, I'd be happy to. So obviously, those periods that we're looking at insuring can go anywhere from, you can have a zero-day waiting period, all the way up to, months to years out, right? So if you're looking to incorporate short-term disability for the short term, right? Anywhere from 30, 60, 90, 120 days, you can put those type of plans in place. But as far as long-term disability is concerned, there's some great low-cost options out there that can help protect that part of the demographic from your workforce that is planning for a much more long-term type situation. People who have maybe had a previous experience with a long-term disability. And to be honest with you, that products become more and more popular throughout the years. But do yourself a favor and really put a magnifying glass over, which carriers and what products are offering. But the difference between the two is just how far out you want to plan for taking care of those long-term or short or long-term disabilities. That's really what it boils down to.
And Norm, you want to talk to how cost is affected by what they call elimination periods or waiting periods, and also affected by whether the disability benefit is for 1 year, 2 years, 5 years, or lifetime,
Sure.
and indicate what an elimination period is and how that operates, and how costs might be affected depending upon the length of time they want to actually carry the disability insurance.
Absolutely, Howard. Absolutely. So it's basically like any other insurance, right? You're basically hedging your bets against what may or may not happen. So really, elimination periods are designed to make it cost effective depending on how long you want to implement a specific coverage for, right? So if it's a 0-day waiting period, it may be a little bit more expensive because it gives you access to the policy right away. Again, what we do is we sit down and we have a no cost benefits analysis to determine what the demographic of your workforce is kind of looking for, if they're real active, their children are active, those types of things. And we can really kind of, again, put the magnifying glass on what's the best situation for your demographic. But really that's what it boils down to is risk and how soon or how quickly do you want access to the money that's in that policy. So you can make waiting periods, you can implement those for 30, 60, 90 days. That makes it more cost effective because it takes a little bit longer to get to that money, right? That's the bottom line, kind of how insurance works. So quicker access, maybe a little bit more expensive, not much, but a little bit more. So making it cost effective for your demographic is really what we like to focus on. And then we'll explain to you in each instance exactly what that means, whether it's a shorter elimination period or longer elimination period. Really just kind of depends on the demographics. So we can really dial it in for you. So I hope that answers your question, Howard.
Yeah. With regard to that, would how long an individual could go and meet their obligations with what they have in reserve dictate how long or short a waiting period ought to be for coverage like this?
Yeah, sure. So again, what we do is we kind of sit down and take a look at the demographic of your workforce, their ages, the whole 9 yards. Are they very active? Those types of things. So we take those into consideration. We really kind of dial that in. That's kind of really where our organization shines. And I'm not here to sell us, but it really boils down to really sitting down with an individual and going over those options. We get to know them personally, build a relationship. Whether they purchase anything or not, and just really advise them on which one of those disability policies will be the best for them based on their life, right? Because we don't know how active they are or not. So it really just kind of boils down to what is that person doing extracurricularly or on their job if they have a high risk job. So that's what's going to determine how we really structure those policies to put them in place. Just getting to know that person on a very individualized basis and determine whether or not it's a viable option for them based on both cost and comprehensiveness of the coverage based on their level of activity, both on and off the job.
Is the cost of the disability coverage sensitive to the type of job that these people have? In other words, if it's not a very, very high risk job with regard to physical risk, versus a high-risk job based on physical risk. Are the costs affected by what type of work the person does?
Yes, sir. That's absolutely 100% correct. So it may be a little more risk adverse if it's a situation where they're say they're a welder or a construction worker. They're up on a roof throwing shingles or something along those lines. Gives you an idea. Truckers that are turning wrenches, maybe a mechanic, something along those lines. They have a tendency to become to have a situation where they're going to have a higher level of risk, right? So yeah, the rates are affected by what it is that you do for a living. So someone sitting behind a desk is going to have much lower risk, much lower risk adverse as far as those policies are concerned. But again, we balance that with what they do on and off the job, and again, we give them those options to really dial it in. It's very specifically tailored to meet their specific needs. But yes, it does affect the rate depending on what you do for a living. Yes, sir.
Yeah, if an employer wanted to make disability available as a voluntary benefit, can each individual who chooses to have disability choose their own elimination period or period of coverage, or is it a one-size-fits-all proposition if it's on a voluntary basis?
Yeah, that's a great question, Howard. So what we like to do is we like to sit down with the employer and really kind of go over all of those options and explain to them based on, again, their demographic, what we should be offering. So we have several different, as well as other carriers. I'm not just saying us, but there are several different levels of coverage available, depending on what you want your periods to be as far as access to the benefit itself. So again, we sit down and we do a very thorough discovery and just ask questions. What do you think would be the best 2 or 3 options that you'd like to offer your workforce? Do you think would make the most sense? So really, that's what it boils down to. So it's really custom tailored. I like to use the analogy of an Italian suit. When it's time to buy an Italian suit, you want it custom tailored, right? You want to be able to offer the best you possibly can. So we literally custom tailor those options to everyone to make sure that we've got the best coverage possible. But yes, they can choose, pick and choose. We can offer 1, 2, 3, 4, 5 different levels of coverage. It's completely up to the employer.
And those levels of coverage can vary as to the length of time that the policy covers or the elimination period to get to the disability. Those are the variables. Would I be correct, and would our folks be correct in looking at it from that standpoint?
Yes, sir. That's absolutely correct. Again, no matter which carrier you partner with in the voluntary benefit space, that's how disability is structured. Because again, it's all based off of risk adverse, right? You've got to understand what we're trying to cover with the policy based on that person's, again, whatever their job may be and or their activity level off the job as well. So yes, that's exactly right. You are correct.
Now, can an employer offer as a voluntary benefit both long-term and short-term disability at the same time?
Yes, absolutely, Howard. As a matter of fact, we like to sit down again and again, this should be with any whether it's a broker situation or you're partnering with the voluntary carrier, whatever the case may be. The bottom line is you want to ask them, what do those coverages entail, short-term and long-term disability, and is that something that fits what you're trying to accomplish as far as providing a certain level of protection to your demographic, your workforce, right? So yes, they can offer short-term and long-term. We can put together, or anyone can put together a long-term comprehensive plan as well as a short-term one to be able to offer that. And the beauty is, coming back again for re-enrollment next year, is we can, hey, take a look at, okay, what worked, what did people take advantage of, what did they not take advantage of, and let's either decrease or increase that level of coverage, whether it's short-term and or long-term, or both, right? So yeah, it's something that we can implement in a more robust products offering, giving them the option to do both, because some workers will prefer to have one or the other, and some will prefer to have both.
Yeah, Norm, if somebody ends up on disability and starts to collect disability benefits, are the disability benefits paid by the carrier taxable to the recipient?
I'm sorry, Howard. I had to get a quick drink of water. Can you repeat that question, please? I'm sorry.
Yeah, if a person should suffer a medical setback, and that setback puts them into the benefit from the policy, are the benefits paid by the company to the recipient taxable to the recipient?
Great question. So they are paid directly to the recipient. So that is something you do have to keep in mind. That's not paid to the hospital, to the doctor, to the, to anyone but the recipient or the owner of the policy. So yes, that's something they do have to keep in mind and understand. Also something to consider is if you're implementing, a cafeteria plan, Section 125 cafeteria plan that can offset some of that, meaning, based on the entire offering, not just the disability, but everything that you're offering, that's something to consider. But yeah, that's something you have to take into account, that is paid directly to the owner of the policy. So yeah, you definitely have to make sure that that's understood when you're moving forward. That's correct.
Are those proceeds or is that compensation taxable to the individual? Did you get that question?
Yes, it is. It is. It is. It is, Howard.
It is taxable?
Yes.
Now, can an individual cover their or the proceeds or the benefits on long-term disability? Can it cover dollar for dollar the income lost, or do they cover up to a certain percentage of that total income lost?
Again, it's going to depend on which type of. There's several different subcategories, if you will, of long-term, depending on which carrier that you partner with. So again, we could go over those differences. Again, it all boils down to what you want to offer, what you want to pay for, right? So you can buy a Mercedes-Benz, or you can buy a Volkswagen. Really, you want to take a look at several different to weigh your options. But yeah, some of them will actually do one or the other. So there are definitely several different policies out there that you can take a look at that take advantage of either one of those situations.
Hey, Norm, do you have any information or any statistics as to, what I'd hate to use the word average, but we throw that around so often. What the average disability might last in terms of length of time? I've heard anywhere from a range of 9 months to 3 years. Generally for somebody that would not qualify for Social Security.
Sure. That's a great question. So yeah, we've seen probably, and I can break it down for you. As a matter of fact, I have that pulled up. So about 20% of the disability policies that are filed, the claims that are filed, are anywhere between 4 to 6 months, and then the majority of them are from roughly 6 to 9. So probably 45-50% is what it looks like, and the remaining is longer than that. So yeah, it's broken down into in that mid-level categories where most of the claims are filed and most people are taking advantage of that benefit.
For long-term disability, Norm, what is the shortest waiting period that's available, and what is the longest waiting period that's available?
Howard, what that boils down to is what we found is we partner with several different long-term disability carriers, and so it really just depends on what level of risk they're willing to accept. So again, we can sit down and custom tailor whatever long-term disability fits best for your particular organization based on the age of the workforce. So I mean, I've seen them, on one end of the spectrum, not very long at all, and again, that's hard to answer because some of them, they don't like to start less than 1 or 2 years, but some of them go out quite a few years more than that. So it really just boils down to, again, specifically, what is it that you're looking to do? So I can go ahead and get with that carrier and go, look, this is the best fit or the closest we can get for your particular situation. But yeah, there's a pretty wide range, Howard.
If somebody wanted immediate long-term disability coverage, zero waiting period, is that available from anywhere that you know of?
Oh, wow, that'd be a tough one. I know there is one carrier that we partnered with probably about a year ago, and I'm not sure if they're still selling that particular policy. So that'd be hard for me to give you 100% yes, concrete yes on that one. But there are several carriers who come close to that. So again, we can take a look at what it is that you're trying to accomplish and find the best possible fit. Again, the market changes. It changes a lot. There's a lot of carriers who've gotten out of that space. There's some carriers who've gotten back into that space, depending on their level of risk they're willing to assume. So there are some that are close to that, what you're mentioning, and there are some that have literally gotten out of that segment of the industry altogether. But we can find the closest fit possible for you if that's what you're looking for.
Now, on the short-term disability, if somebody wanted short-term, what is the longest period that a short-term policy would cover? I've been heard anywhere from 6 months to a year, or maybe beyond in some cases. But what would a short-term policy be able to be stretched out to if somebody were interested in that?
Yep. So again, it depends. It's very carrier specific. So you got to, when we sit down and do a benefits analysis and determine what you're trying to accomplish, we'll be able to, put you in a situation with the carrier that gives you what you're looking for, right? So I can answer, I'm familiar with at least 6 different carriers in that space. So you're looking at anywhere from 6 months to actually some of them have 2 years, right? So it really just depends on what you're willing to pay and what you're trying to put in place. And, does your workforce or your demographic qualify for that? Depending on, again, risk adverseness. What do they do for a living? What are they doing off the job? So all those factors come into play when a carrier is willing to, put some money on the line, right? So again, we can figure that out, but the most I've seen is 2 years.
I gotcha. Now, on short-term disability, are those benefits tied also to income level? But could they also be purchased on a scheduled level, like $200 per week, $300 per week for X period of time? Are
Yes.
either of those two available?
They are, Howard. Again, what it boils down to is if employer is willing to do what's called the defined contribution is really kind of the designating factor there. So if they're willing to do a defined contribution for the employee, then we can set it up on a level pay, whatever amount they determine is in their best interest. So $100, $200, whatever the case may be. Yes, both of those options are possible depending on what the employer is willing to do. So yeah, we can. Yeah, you can do that. That is an option to either.
And one more. At what point, Norm, have you seen Social Security then become available when the private disability insurance is no longer there?
Yeah, that's a perfect bow on this, Howard. I appreciate that, because what we do is we like to set that up in advance, knowing exactly what day. Again, that's based on the individual, but we put that into the plan, right? We make sure that they understand that once we reach a certain milestone and that becomes available, that we want to make sure that that person is able to take advantage of the benefits that this country provides them in that certain instance. So that's actually part of the plan. As people age into that particular segment, and so that is something that we have on a schedule. Right? We're ready for that in advance, so we understand that they can move right into that situation. And the beauty of a lot of these products is they can be ported, but in this case, disability is a little bit different, right? Because you're not working anymore. So that's one thing you got to understand. Moving out of the workforce and into retirement, there's a whole different set of rules at play.
Norm, if somebody qualifies for Social Security disability, can they collect both Social Security and from the private sector, or is it an either-or proposition?
Well, it's going to depend on what the policies are, Howard. So the disability insurance, for example, is something that, if you're not working, right, then there's really nothing to pay the disability on, right? That's for, a situation where you're employed. But the other policies, for sure, there's plenty of other voluntary benefit policies out there, no matter which carrier you go with, that are designed to be completely 100% portable, right? So you take those with you and move into a situation where if you still feel like that level of coverage is something you want to protect yourself, then by all means, port those products and take them with you. And that's something we can discuss, sometime in the future, maybe if anybody, has interest in taking a look at how that works. But yeah, that would be the only one that's kind of excluded in that particular instance is your disability, because you're no longer working.
Now, can a disability policy be obtained so that if an individual has a specialized type of endeavor, let's just say a piano player, professional piano player, and they injure their hands to the point where they can't play the piano anymore. but they can do something else. Are they considered to be disabled at that point because they can no longer pursue their chosen occupation, and what they do thereafter, they can only make up to a point that's substantially less than they used to? So does disability fill in that gap? Can it be defined to that extent?
That's a great question. So really, it's going to depend on, again, Howard, exactly what they move into. So who's to say what what work field they move into? It's really just going to depend on if it's the same level of risk, and we're willing to take a look at, okay, well, what is it that you're moving into, and is that the same level of risk? Will the policy become more expensive or less comprehensive? But that doesn't mean that you can't get it. So I understand where you're coming from on that question, but it really just kind of depends on what they're going to be moving into. And we just sit down and take a look at that situation and see if it still applies, and what level of coverage can be provided at that particular time. Does that make sense?
It does, and just to drill down on that just a little bit deeper before we leave,
Sure.
Let's assume that piano player is making let's say $5,000 a month,
Mhm.
and no longer can play the piano, and the
Mhm.
most they can make going forward in another field is $3,000 a month. Can a policy be fashioned to make up the difference in what income they lose as a result of being disabled from what they have been doing before?
Yeah, so what we would do is we'd take a look at is kind of what the bridge there would look like, right? So we can figure out based on whatever it is that they're making now. Now you got to be careful, right? You got to be careful, because if the new situation they're going into, whether it's 1099 or W-2'd, you really got to be careful, because you don't want to get yourself in a liability situation where you're defrauding the system. That's that's something you really got to be careful of. But there are ways that you can structure both short-term and long-term disability to work to a place to where that it's manageable for you, because you've got to be able to make a specific amount of money each month, and we'll be able to get as close as we possibly can to that. But you just really got to be careful if it's not the same level of income. You just have to be very cognizant of not taking advantage of the system, but putting yourself in a position to create the most beneficial situation possible, if that makes sense.
Sure, it certainly does. Uh, does anybody else have any questions about any of the things that we talked about? Those were some of the thoughts that I had, and some of the areas I thought that might be helpful for you folks to have some insight about. But does anybody else have any questions?
So, Howard, this is Heather. Hey, Norman, thanks for being here. One of the questions Tammy Kuehl had is this type of insurance pre or post-tax for the employee? And are the benefits, if the policy is used, taxed or tax-free income? I know you touched on that a little bit, but that was Tammy's direct question. If you want to
Yep, sure.
click on
So
it some more.
yeah, for sure. So yeah, when the policy is used, you have to understand that it's considered income, right? Even though it's 60% of your income, it's still considered that, because that's basically what the policy is doing. We're insuring the paycheck, right? So we're insuring their income. So it's going to be taxed to a certain extent. So you have to understand that going into it, that is going to be a situation where there is a cost involved for that. So the pre or post tax for the employee, again, the cafeteria plan or Section 125 plan, you can put into play for every other product as far as pre-tax availability is concerned, to be able to take advantage of that situation. But for the disability, that's not included on your cafeteria plan, right? That's a completely separate issue or entity outside that. But it can be offered on the same enrollment chassis. So there's not two separate enrollment situations. It's all done at the same time, but that's how it's structured.
Okay.
Gotcha.
Thank you.
Yes, ma'am.
But thanks for picking up on that, Heather. I couldn't see that very clearly on my screen here.
Oh.
You get the better screen. That shows you who has the juice in this one.
I saw the chat and I was going to go for it, but I wasn't sure if I needed to jump in or wait for your guys' lead. So.
Yeah,
Let's see. Debbie Batchelor has a question. Debbie,
Okay.
if you want to unmute yourself.
I think you mostly we're talking about voluntary benefits, but my company has looked several times into maybe offering it as a part of our company benefit package. Now, my policy right now, I have one with the duck, and it's very personalized, very customized according to my income, my age, you know, the elimination period, that sort of thing. But if we wanted to set something up company-wide, I think you touched on that just a little bit with having like different levels of coverage, maybe that the company could choose, whether it's a $200 a week benefit or a $300 a week. But how does that work out? Because you have a lot of different ages, you have a lot of different pay scales. How would you structure that for company-wide if the employer wanted to pay for it rather than being voluntary?
Sure, that's a great question, Deborah. Thank you. I appreciate you asking that. So really what it boils down to again is, just say for example, we were to meet with you and you wanted to offer 3 or 4 different levels of coverage. And you're right, we don't know in advance all of those details. So what we normally would do is ask for a census to figure out exactly what we could put in play that would give your employees the most possible choices that we can offer, right? So it's really, like you said, you know, with your policy, it's very specialized, right? So the cool part about what we do is we can literally dial it into what they want and what they're looking for. So if the census tells us as much information as it can, and then we sit down and have a discussion with you about the rest of the demographic of the workforce and ages and activity levels and all that, you only know so much as well. So it really boils down to how much time can I spend in a one-on-one benefit counseling situation to help that person custom tailor their policy. So it's built on a group chassis. So we sit down and we enroll each individual one-on-one and have a discussion with them. So this is what, you know, your employer is offering based on the information they have. But we can literally dial in and give them a little bit more specific choices at the actual consultation itself. So we can say, okay, well, this is the base plans that they're offering, but if you want to go ahead and move forward in this particular situation and purchase a little bit more or different coverage, then that's up to you individually. So it's offered, the enrollment solution is offered on a group chassis, but it's individualized, right? So you get the advantage of having it at the group rate, but they get to specifically tailor it to their needs, and that may affect the cost depending on how much, you know, the level of coverage they want or what type of coverage they want within that disability. So we really can do, you know, either or. So whatever the employer wants us to offer, we put that out. And then if that employee wants to create a more specialized situation where it's very specific to meet their needs, then we can do that on the spot, right at the enrollment. Does that answer your question?
So are you saying then that maybe the employer could offer to say, okay, I'm willing to pay this much towards your disability insurance. If you want more than that, then it's up to you to pay the balance?
You got it. That's exactly right. And that's what a lot of employers do. Just like you would with your major medical insurance, right? You're offering a certain level of whatever that you're offering, and you're willing to pay for that, and then the rest may be on them. So it's a similar type of philosophy or mentality. Yes, ma'am. That's exactly right.
Oh, okay. Thank you.
Absolutely.
Are there any other questions? Heather, you see anything else pop up?
I do not. I don't see any more questions coming through or hands raised.
Norm, are there any areas that we perhaps may have left uncovered, or any specifics that perhaps you feel needed to be added at this time?
Well, actually, Howard, you did a fantastic job of covering disability and getting some really great questions that give a very comprehensive overview. So I appreciate that. So no, I really believe that I think we've covered it as much as it can be covered, and without beating a dead horse, that's disability in a nutshell.
Listen, if any of these folks or any of the folks that were not able to make it today would like more information and have a little bit more detail, you know, they're not obligated to do anything necessarily if they're seeking to know more until they're able to decide whether or not this is something for them. Would you be available for consultation?
Yeah, Howard, I want to make it crystal clear to everyone that our intention is to help put you in the best situation possible. It's not just to sell products. we want to make sure that what we provide as far as enrollment solutions, benefit counseling, and whatever product you decide you want, whether that's us or somebody else, we're willing to have that conversation with you, go over your options, and if another carrier is a better fit for you, we're okay with that. We want to make sure that our customer gets put in the right situation every single time. So we're more than willing to sit down and do a no-cost benefits analysis to determine what's best for you and your organization. And if that's our product, great. But if it's not and it's somebody else's, we're willing to support that as well because we want to do what's in your best interest. So yeah, more than willing to sit down and talk with anyone.
Norm, would you want to mention your telephone number and how you can be reached if anybody would like to talk in any further detail?
Sure, and then I can also put it in the chat box. So we have two offices locally here, one in Creve Coeur and one in Manchester in De Pere. My number is 314-495-6457. Went ahead and put in the chat box as well. Feel free to shoot me a text or give me a call to schedule, your benefits analysis. Again, no cost, no pressure, none of that stuff. We just want to make sure to help you out if we can.
That's fine. Before we sign off, are there any other questions? Well, in behalf of all of us, we want to thank you for taking the time to join us this afternoon. We're going to, every couple of weeks, touch on a subject that we've received some inquiries about, areas that we feel might be helpful for you as well. And, we certainly look forward to being able to help answer whatever questions you have on any subject. So you all have a very, very good afternoon, a safe afternoon, and thank you very much for allowing us to share this time with all of you.